The bankruptcy of Lehman Brothers was one domino falling during the global financial crisis in 2008. China's relatively isolated financial system to the world helped it avoid huge losses. But the country's financial system doesn't necessarily mean that it's immune from a Lehman event. The interest rate is at 8% at Chinese banks. This high rate is forcing domestic companies to find other means to get loans. One way is by buying and selling copper. They can use it as collateral, or they can just sell it off. Importing copper or iron ore is one method to avoid high interest rates. This is called copper financing or iron ore financing. A Goldman Sachs report said that in 2012, over 10% of China's short-term foreign currency loans actually belonged to copper financing. Last year, the Chinese government already implemented policies to curb copper financing. As of now, it hasn't put restrictions on iron ore financing, but doesn't mean that there's no risk there. As Caijing.com reports, recently, the Chinese Banking Regulatory Commission informed Chinese banks they would evaluate the general situation of the country's iron ore financing market. Late rumors spread that Chinese companies have to pay at least 50% as a deposit when getting financing for iron ore imports. Market insiders predict the new policy would make many iron ore trading companies go bankrupt. Affected by that, iron ore futures have dropped by 4.5% overnight. Statistical data from the General Administration of Customs in China shows that last year, over 50% of global iron ore was imported to China. The total volume reached nearly 820 million tons. That's equal to 638 billion yuan, or about 100 billion US dollars. Iron ore has already become China's second largest bulk commodity importer, only behind crude oil. Data from a Chinese steel industry website, mysteel.com, shows that from the beginning of this year to the end of April, the total iron ore inventory in China's 41 major ports has reached 113 million tons. It saw over 2 million tons in increases from the previous week. However, by contrast, China's steel output volume didn't see any increases. Data from the China Iron and Steel Association shows the country's crude steel production volume has declined by 2% during the first quarter of this year compared to the same time last year. Domestic steel prices have also plunged to their lowest point since May 2009. It seems that two figures are contradicting each other. But from a market insider's point of view, the imported iron ore is for companies that get cheap financing instead of producing it. Don't go away, because up next in Money Matters, we're talking about iron ore financing. Stay tuned.